It's at a 50% discount in comparison to Nifty. And normally, they're saying on an average, it trades at around 16% discount. So 3 factors: volumes, e-auction prices bottoming out, and also they're talking about valuations. Dilip, do you concur?
Well, I think Coal India certainly has a reasonably good prospect ahead. I mean, if I were to say from here on, I would think that something like another 15-20% price is possible, very much possible. I think largely because the factors so very well spelled out over here. But my major thing is that the Coal India was always very cheap and it will continue to trade cheap, not because of anything else, but because most of the PSUs do trade very cheaply and nothing has really changed overnight. I mean, the DNA of all the PSUs still remains the same, and I would not make Coal India as an exception. So I would say that yes, for a 15% gain for a big cap stock, it still means a good return. But otherwise, PSU and a commodity does not really excite me so much.
Dilip, your thoughts on the latest EV promotion scheme for two-wheelers and three-wheelers? There are 2 ways to look at it. One, you should be happy because in the current scenario, the incentives would have ended on 31st of March. At least now you've got a temporary extension of 4 months, although lower incentives compared to what you've had in the past. But then the others would argue that, well, you're getting, they were anyway expecting an extension, and now this time you're getting much less than what you were earlier getting. The stocks have come off from the highs. The potential beneficiaries like Sona, Comstar, Uno Minda. How would you read this development?
Well, very frankly, something which depends so much on subsidy and not on the core profitability, and that too, one is not very sure that how and when the subsidies are really paid off to the companies. So I think both the combination makes it a lot more less exciting than what we think. I think EVs are still, I think there's still a long way to go before it really evolves because things are still undergoing a lot of changes and it keeps on evolving. So I think I would not take a bet on this particular sector from the current levels.
Okay, Dilip, stay with us. What we'll do is we'll take a quick commercial break here. Markets holding nicely, 128, 130 points, 22,125. We'll take that break. We're back. Ronak Onkar, CEO, co-fund manager, equity, and head of research at PPFAS Mutual Fund, will also be with us when we return. Stay with us.
Welcome back. Banks have extended the fall. The Nifty banking index is now down to 80. When we started the show at 2:30, it was a 150-point knock, and now it's fallen some more. There you have it. PSUs continue to rule the roost today. SJVN 17% up, ITI 15% higher. Railway names, IRCON, IRFC, RailTel, all these stocks are showing you some big double-digit moves. But despite the gain today, they haven't managed to recover the losses over the last 3 days. Let's go across now to Nimesh to talk about Ipca Laboratories. Nimesh had highlighted this stock as a standout brokerage report in the morning, and the stock has done well, Nimesh.
Yes, Rima. So the stock is up 4% on the back of a big upgrade from HSBC. So today they've upgraded the stock to buy from hold, and they've raised the target price to 13.35. Now HSBC believes, and they see a notable margin expansion for Ipca going forward on back of healthy growth in the focus areas, which is UK as well as India, and also they're seeing easing cost pressures to add to the margins going forward. In fact, they are building in an EBITDA improvement of over 470 basis points and a PAT CAGR of 50% plus between FY24 and FY26 estimates. So that's a big number that they're talking about. And they say that the pickup in the US supplies will be the next big catalyst for the stock to outperform. However, they've also highlighted some risk, which includes continued volume slowdown in the India market. So that could be a big risk for Ipca going forward, and also from in the developed market, some currency risk could be a bit of a challenge, as well as supply chain disruption. So while they see some risk on the horizon, but given the risk reward and on valuations, today they've upgraded the stock to a buy from hold, and HSBC has raised the target price now to 13.35 on Ipca.
Okay, that's Ipca, and Ipca has been in the green throughout. Nimesh, thank you very much for that. So that HSBC note is working well for this stock. Dilip, any interest in Ipca? Have you had a look at it of late?
Well, I think about a couple of months back when we were actually analyzing some of the pharma names, and I think Ipca, if I recollect properly, we were thinking that the PAT growth from 24 to 27 would be roughly in the region of around 25 to 30%. That is the CAGR we are talking about, gather. And apart from that, I don't remember right now, but that's a stock which probably has not done much of late, but certainly merits a look. And I think certainly we'll have a real look at it again because Ipca has always been a pretty steady performer all throughout.
Okay, all right. Thanks very much, Dilip. Appreciate you joining in, and great speaking with you as always. You know, another name is Angel One, and something we've been discussing in the last couple of days. I mean, if you sort of sort by what has lost the most in this correction from the highs, Angel would sort of figure prominently. I'm talking about large liquid names, high growth names which corrected significantly. Angel fell from 4,000 to about 2,400. I mean, the low was actually 23. Yesterday's low was 23.30. And today there is a strong bounce back at hand. I think we discussed this day before yesterday. It's on F525 expected earnings. It's now trading at about 13 and a half odd times earnings. So that's another interesting kind of name, which I just wanted to highlight. Ronak Honkar is with us, co-fund manager, equity and head of research at PPFAS Mutual Fund. Ronak, good to have you with us here. Good afternoon. Thanks for your time. You know, everything happens in double time, quick time now, unlike 10, 15 years back when, corrections could be grinding, long-winded, could take months. This is a quick service in that sense. Is it done, is the question though, Ronak? What's your sense? Is the excess out in that sense?
Thank you for inviting me, Prashant. And it's a very interesting question, which anybody can give any answer and it can sound right. So the problem here is it's very hard to predict. What we do, and we try to avoid predicting this precisely by just focusing on the businesses we own in the portfolio. So if a few businesses are doing okay, the valuations are reasonable, and they have a runway which we thought they should have over a period of time, then there is no reason to worry about whether there will be a broad correction, when it will happen, why it will happen. In fact, if it corrects and the business economics still remain the same, you can continue to buy at reasonable prices. So we do tend to keep a little bit of cash at hand when we think the valuations are a little heated. At the moment, we're at 13% cash in the portfolio.
So 13% cash, what was it, say 6 months back? Have you lightened your holdings in any of the mid and the small cap stocks over the last few months? And would you look to do a little bit more of that?
It would have been more or less the same range of cash in the portfolio. It wasn't dramatically different. Wherever we found a little bit of expensive valuations, we have trimmed. But otherwise, we have been adding wherever the valuations are still reasonable. So net it's going to be the same.
Do you want to tell us where you've trimmed your holdings and what made it to the buy list to increase your weight?
It's the existing stocks we own. So some of the private sector banks is where we added a little bit. We also added to some of the smaller names in the portfolio earlier, which were high dividend yielding stocks. Some of the PSUs we added where we felt the valuation was still reasonable. And in the trimming list, there will be some cyclicals we had bought for special situation in the past. We have trimmed those. Something like NMDC Steel or NMDC, etc.
Okay, got that. Ronak, hi, good afternoon. I noticed that you continue your, big love with HDFC Bank, right? I think it's still one of the big positions in both your portfolios, in the Flexi Cap as well as in the Tax Saver Fund, right? So what's the thought process? Because it's just been really trying investors' patience. So as money managers, I mean, you're still being patient. Have you added more? And sort of how do you deal with it from here on?
Deal with it is fine. It's very easy to deal with when you know that there is a period of adjustment they will have to do because of the merger that has happened very recently. We have to give them some time for the numbers to normalize. So that is one way of looking at it. The other way is to see whether the loan book is better or worse, say, compared to 5 years ago, whether the expansion of the branches that they're going to do is better or worse than 5 years ago, whether other initiatives like having the management aligned. So we have a change of management in the company of this size. Does it work out in the favor over a 5-year period? Some of these longer term trends are something we want to monitor rather than waiting for the valuation to keep going up in a short period of time. So yeah, patience is fine, but on the other hand, business metrics also should demonstrate over a period of time. So we will wait till the numbers either become better or worse and the valuations remain wherever they are based on the numbers.
All right. Hi, Ronak. Good afternoon and good to see you. When you're in the peers, you'll have added some of these private sector banks, as you mentioned, HDFC Bank, Kotak Bank, as well as, I think, ICICI Bank. All three of them, I think you'll have added some weightage in the last 1 month or so. The other big heavyweight that you'll had is ITC. And there was some weakness. The stock corrected close to around 20% from the recent peak in anticipation of this block. You'll have added on positions there as well, right?
In the past, we did, not recently.
Okay, all right.
ITC remains to be a big part of the portfolio.
Big part of the portfolio. And the other couple of names, I think, is EID, Parry, as well as Power Grid. Have you added positions over there as well?
Yes, so Power Grid we have added maybe recently. EID, Parry also a while back we added. It started in the last couple of months only.
Interesting. One more point, Ronak. You all were playing, I think, the Bajaj story via the holding, Bajaj Holdings. Over there as well, you'll continue to play the Bajaj Holdings. I think Bajaj group companies like Auto as well as Bajaj Finance via the holding company. Have you increased positions there as well, Bajaj Holdings?
So in the portfolio, we already had Bajaj Holdings as a very sizable portfolio position. But we also have Maharashtra Scooters as a small position. So yeah, we still do hope that the holding company discount is something that allows us to buy this at a cheaper valuation. And we do want to buy it through the holding company rather than buying the underlying.
Right. Just one quick point before we want to talk about the. I think you guys must also be busy with the stress test. Surabhi is going to sort of give us a heads up in just a bit. But one thing on the in the Flexi Cap fund, Ronak, with the fall that we've seen, have you and you're sitting on some cash? Have you found up new stocks which have come off? Which you've tracked, you like the businesses, but valuations were unpalatable and now become attractive, or not really?
Not really attractive. So a lot of companies stay in our grocery list of what we want to buy at a certain price, but none of them are at a range where we say suddenly, okay, now we go and put all the cash into action and buy those companies. That time has not come yet.
Okay, all right. Now let's talk about the stress test, the mutual fund stress test results, which I think we should get tomorrow. Surabhi, tell us more.
Okay, so I'm going to try and simplify it as much as possible. I think most people know it, but for those who've kind of missed out on this, why are stress tests happening? Because there was a dialogue between SEBI and the mutual fund industry about the possibility of a little bit of excessive risk building up in small cap funds and in mid cap funds, because that's where all the money has been gushing in over the last couple of months. So then the body decided to get together and say, okay, let's do these stress tests. Actually, they are an ongoing phenomena in the mutual fund industry. Now, SEBI says the results must be made public so that investors can figure out whether they should be investing any further in small cap stocks, mid cap stocks or not. So what is a stress situation? That's the first thing. This is being described as a situation where there are two conditions. One, only 10% of market participation is available to a mutual fund scheme. When I try to understand what that means, what is 10% market participation, one interpretation was that instead of, let's say, 100 crores of total turnover, there's only 1,000 crores, there's only 100 crores of turnover on that particular day with that particular scheme. The second condition is when trading volumes are 3 times the normal trading volumes on all the individual scripts that are part of a portfolio. So this is basically the definition of a stress situation. So now what do mutual funds have to do? They have to check how quickly can they liquidate the portfolio and basically meet the redemption requests that might be coming in on such a stressful day. So they have to declare how long will it take, the number of days it will take to liquidate 25% of the portfolio and 50% of the portfolio. Please remember, the end objective is very simple. SEBI wants to ensure that if it is a high stress situation and if investors are asking for redemptions, if they want their money back from these funds, they get their money. That's the sum and substance of it. Interestingly, these tests are not going to take into account the top most illiquid securities in a portfolio, which comprise up to 20% of the portfolio weight. So it's a little technical, which is why, Ronak, I wanted to come to you. And it's a two-part question. One, just explain to us this concept of 10% market participation. What does this mean? That's the first part of the question. And second, if you're not going to consider 20% of the most illiquid securities, then what's the point of the stress test anyway?
I think I don't have the right technical definitions for what you're asking, but what I can understand from what you just said is the concern is about liquidating the portfolio over a period of time when redemptions happen in a gush. So if it is a small and mid-cap kind of a company where anyway the volumes are very, very thinly traded as compared to larger companies, then that's the reason the stress test is used, so that people are generally aware of how much time it will take. And like you correctly said, this is an ongoing role anyway. So this is not something where suddenly the mutual funds have to comply to this and start testing the volume and redemption rates that they have seen. It's going to be an ongoing way. And I think for illiquid securities anyway, most companies have a large number of stocks in the portfolio. You can't have just a concentrated portfolio of few stocks. So the portfolio along with that also can be liquidated over a period of time. So it's not necessary that just because the liquidity conditions are poor for these companies, you cannot liquidate them over a period of time. Of course, there might be a correction, the price might be different, but these are all hypothetical things. So technically discussing them is very difficult.
Well, we'll have to discuss them because the results are going to be out. I mean, some people say by tonight or maybe early morning tomorrow, and then we have to make sense of whatever these results say.
But is there some, they said that the number of days it takes to liquidate your portfolio, right? 25% and 50. Suppose we get a number, it takes 10 days, it takes 7 days. What would constitute a risky proposition for an investor? Is there some, broad, fence sort of a number that you can give us?
I don't think we can generalize that. So different people will have different time horizons of how they have invested in these schemes based on their investment requirements. So I don't think we can generalize whether 10 days is risky or 5 days is risky or 100 days is risky. So the first thing is we need to interpret them very carefully. It's not something where one number suddenly means something has changed dramatically. The nature of the companies will remain the same. The valuations people will pay will change based on their expectations. But I don't think the number can be given. Say for you, it might be 5 days is more risky. For me, it might be 350 days might be more risky. I don't know. So it's a different gauge.
No, absolutely. Yeah, no. Ronak, take your point 100%. And I think that is where the regulator is coming in from, that disclose this. So if someone has put in their hard-earned money in a small cap fund, they should know that if they want to get their money back, assume it's going to take at least 15 days if you want the whole money back, or if the fund suddenly has to sell. Basically, it's another number that investors can use to gauge the level of risk and whether they're comfortable with it or not. So take your point completely. Thank you very much for joining us today and giving us thoughts on your portfolio and, of course, all the other trends out there.
So, there's another thing. There's in this entire thing, right, there's a bit of a, how do I put it, reflexivity involved, in the sense that this is to test extreme situations.
Yeah.
And say there is a crisis, right? First thing which disappears is liquidity.
Yeah.
So when you start to decide to sell 25%, as you sell, the number of days will go up, actually. So this is based on average daily, whatever average daily volumes, or whatever what you can sell based on previous data. But when that actually happens, you create your own lack of liquidity in that sense, because you come to sell. And as we saw yesterday, for example, right? On sharply down days, liquidity disappears. There are no buyers.
So that is exactly the point. And even yesterday with Mr. Prashant Khemka, and then we had Nilesh on the show, I was asking them the exact same thing, because it's exactly for those kind of scenarios that these tests are being done. Now, yesterday, most of the mutual fund houses were at least telling me they were not getting redemption pressures. There was, in fact, more money coming into a lot of funds, large caps and even mid cap and small caps. But what if on a down day when you have 2,000 securities declining, and suddenly a fund house gets a huge redemption?
So
then who will buy? How will that fund house sell? That's exactly what they want to test.
I think the regulator just wants more information out there. And I mean, that's all you can do. I mean, you can't forecast what's going to happen. And then based on the current situation, how many days it will take. But we'll see. We'll get the data. And of course, we'll analyze that as we go along. But, on to something sort of interesting. Opinion poll by News 18 across 242 seats, Lok Sabha seats, shows the NDA could likely garner a whopping 174 seats and a major chunk of the voter share in the coming elections. Election fervor is going to increase as we get into the general election phase. But all doesn't look too gloomy for the India alliance either. My colleague Parikshit is here with key takeaways from the from the News 18 opinion poll. Parikshit, take it away.
The Lok Sabha elections are just days away, and News 18 has conducted a pan-India opinion poll to capture the mood of the nation. Now, before we reveal the details, here is the methodology. More than 118,000 people were polled across 518 Lok Sabha constituencies in 21 states. Essentially, the poll has covered 95% of the Lok Sabha constituencies in the country. Now, let's look at the projections in some of the key states, starting with the biggest prize of them all, Uttar Pradesh. Now, as far as the vote share projections go, across 80 seats in UP, we're giving 57% to the NDA as per our survey, 26% to the India Alliance, 9% to the Bahujan Samaj Party. Now, as far as the seats go and who's winning and who's not, 77 or a clean sweep for the NDA, 2 for the India Alliance and 1 for the Bahujan Samaj Party. Let's also look at the state-wise numbers across 242 seats which were surveyed. Let's get you the big numbers right here. Out of these 242 seats in Bihar, it is advantage NDA with 38 seats. Kerala, advantage the India Alliance with 18 seats. As far as the NDA goes, it is likely to open its account with 2 seats. As far as Madhya Pradesh goes, it is advantage NDA with 28 out of 29 seats. In Tamil Nadu, the survey suggests that yes, the BJP and the NDA may open its account, may do well with 5 seats. India Alliance holding sway in Tamil Nadu with 30 seats. In Haryana, a clean sweep for the NDA. Remember, Haryana is a state where the BJP has made a lot of changes in terms of Manohar Lal Khattar going to fight from Karnal, Lok Sabha seat, Naib Singh Saini being made the chief minister. Let's talk about Punjab. Here it has advantage India Alliance with 8 seats out of 13 and 3 for the NDA. In Himachal, the survey is suggesting a clean sweep for the NDA and the BJP at 4. Delhi, this is a state where the BJP has changed 6 out of 7 candidates from 2019. And here we're told that it is an advantage NDA with 7 seats. Uttar Pradesh, this is the big prize, 77 or a clean sweep for the NDA out of 80 seats and just 2 seats for the India Alliance. So we've got you numbers for 242 seats and 174 seats is where the NDA has a big advantage and it seems to be winning right now. So this was the result of our survey on day 1. We will also be getting you numbers from the rest of the Lok Sabha seats this evening and the big national picture. So tune in for our special coverage at 7:30 p.m. this evening, where we will get you more analysis and a complete national picture at 9 p.m.
Election fever gripping us now. We'll slip into a very short break. Parikshit, thank you very much for joining in and explaining that. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter and also some technical calls.
Welcome back. You're tuned in to Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, a couple of stocks actually are going on with solid gains. You have Chola Investments as we speak. That's recovered close to around 5% from the low point of the day as well as we speak. So just pull up the intraday chart. And the Nifty is not doing too badly at around 22,150. I think it's a good time to get in. Nimesh, tell us, the screen is looking much better. Yesterday, people would be skipping a heartbeat. But today, it's green on the screen. Portfolios will be feeling good as well. What are the flows pictures like?
Oh, absolutely. So, a good recovery, but it was more from an oversold position. So, this was very much expected as well. We looked very oversold yesterday. The PCR had fallen to 0.65. And again, from a flow perspective, I understand today you might see a buy figure from the FIs. I understand there is a small market at close basket buying as well. So, need to see what the institutional number is. A big liquidity event is tomorrow, which is the FTSE rebalancing. That will lead to almost $1.5 billion of inflow. Of course, large part of it is in the HDFC Bank. But even then, outside of HDFC Bank, we'll see a decent inflows in select names. So, that is a big event to track. But just look at how the things have panned out since yesterday. I just want to give a bit of a perspective on what happened yesterday and the reasons why markets fell. Right, one of course was the advanced tax. That seems to be now behind us. Now whoever need to sell, they had to sell. So that's over. The stress test for mutual fund was another reason people are alluding to. That will come to a closure either today evening or tomorrow. So even that will come to know pretty much. Again, even from a liquidity point of view, for the retail and HN investors, whatever that to square off the positions for the March end, that seems to be largely getting over. So even that that's got played out. So from here, for the markets to fall, there has to be some really big news. Maybe the one speculation about the electoral bonds and the details there, that could be a bit of a knee-jerk reaction for the market. So that needs to be watched. But on the positive side, as I pointed out, the FTSE flow would be a big thing to watch out from a liquidity event point of view. We've seen a bit of a pullback as well, short covering as well in some of the PSU names. But within the PSUs, I understand this is going to be very selective now. Even today, there are mixed flows from larger institutions. The only sector which stood out was metal names. A bit of short covering as well in the names like Hindustan Copper and Nalco. But broadly, the feedback seems to be the key risk for the markets to fall seems to be largely behind now. We need to see whether this momentum can sustain. And two, post the FTSE rebalancing, needs to see how the institutional flows pan out.
Indeed, a couple of headwinds out of the way, it gives us a better runway. Yeah. All right, but what about individual stocks, Nimesh? What are you picking up?
So in terms of individual names, the first stock on my list today is Sundram Clayton. There was a large block. The stock is marginally under pressure today, but there was a large block. 7% equity got changed hands. I understand the promoter entity was a seller in today's block, and a leading HNI investor from South and a couple of domestic mutual funds were buyers. So the disclosures could be quite interesting as far as Sundram Clayton is concerned. The second name is Infosys. Within the IT name, this stands out purely on back of strong flows. So expect very high delivery volumes in Infosys, and I understand some FI interest is back in that particular name. The third stock is PTC India. That stock is up 7-8% in today's trade, good volumes as well. I understand some bit of flows are positive at HNI desk. But from a trigger point of view, all eyes will be on the EGM on 28th. That is when the deal for selling the stake in PTC India Financials could be closed. So they'll get a lot of money from the deal closure. So that is a trigger for PTC India. The last name is BLS International. That stock has locked at 20% upper circuit today. It fell sharply yesterday, but sharp recovery in today's trade. And I understand a leading FI investor was a large buyer in today's block. So even disclosures in BSL International could be very interesting because the stock is locked at 20% upper circuit.
Okay, thank you very much for that. I was wondering why BLS International is up 20%, leading FII buyer there. Let's move on. Paytm Payments Bank, mandated by the Reserve Bank of India, will cease operations such as accepting deposits, processing credit card transactions from tomorrow. Ritu, who's been following this story now closely, joins in with more. Ritu.
Well, tomorrow is that big deadline for Paytm Payments Bank to wind down its banking activities as per RBI direction. So now the focus really shifts on how the linked businesses get impacted or how they pivot. And we've been given to understand that the National Payments Corporation of India, or NPCI, is likely to grant Paytm a third-party application provider or TPAP license very soon. It is expected later tonight, but no later than the 15th March deadline. That is going to allow Paytm to continue allowing its customers to use the app to make UPI payments. Now, so far, Paytm's UPI transactions, if you recall, were handled by Paytm Payments Bank alone, but now the UPI handle, which is currently at Paytm for users, will be migrated to other banks once it gets this license. We had also reported this earlier that Yes Bank, Axis Bank, HDFC Bank and SBI are among the 4 banks that are likely to come on board as payment service providers, or PSP, which means these PSPs will facilitate electronic payment transactions between various parties that use the Paytm app. Now, Paytm has already moved the nodal account to Axis Bank to help settle these UPI payments, and it is also in talks with other banks. Remember, the payment services that forms more than 60% of Paytm's revenue stream as of FY23. So it is an important segment that will be protected with this TPAP license. If you look at Paytm's UPI operations, it is the 3rd largest app for UPI payments, and as per NPCI data, they processed 1.41 billion out of 12 billion transaction volumes in the month of February alone. So we're talking about a close to 12% share. But as far as the banking activities are concerned, we've been given to understand from our sources that RBI is not inclined to change its stance, and so any further relief is unlikely.
Okay, thank you very much for that. Important information coming in on Biocon Biologics, where they've signed a 10-year collaboration with Eris Life for their branded formulation business. The stock is up close to about 7%. We'll try and get more details, but the stock is spiking up with this collaboration with Eris Life. Mitesh is now back with us for a few BTST calls. Mitesh?
So I think, the market has kind of held on the bounce back. So we'll go with one buy and one sell. Axis Bank is turning weak. The banks were holding out nicely in the last few days, but today there's a breakdown. So STBT here with the stop at 1068 for targets of 1040. And on the buying side, I've been recommending IT names. I think that's a space which looks strong to me. So Persistent is a BTST with a stop below 8300 for targets of 8390.
Okay. All right. Biocon is surging, is up about 6.5, as Remo was pointing out. We'll have the intraday sort of chart come up and at about 269, 270 now, pushing up. Just take a quick look at what else is happening. The Nifty, by the way, is also surged. We are back, not quite at the day's high, but not very far either. The high today is 22,204, and we're at about 22,162. So there is, I think over the last 15 minutes or so, a recovery which is kind of set in from 22,100 at about 3 o'clock, just before 3 o'clock. There's a 60-point rally which has come in the last 15 minutes or so.
Even the mid-cap index has moved to the day's high, and so has the small-cap index. So the mid-cap index now is up approaching a 1,000-point rally, and the mid-cap index has gained more than 2%.
Absolutely. Well, we'll take a quick commercial break here, but as we do that, listen to what Harsha Upadhyay of Kotak AMC had to say about the recent sort of market volatility and what he's making of it. Listen and take that break. We're right back.
At this point of time, probably wherever we had seen excesses is the pocket that is correcting more than the overall market. So to that extent, some of the names that we like on a fundamental basis are yet to reach those levels where we could probably deploy all of this cash. Economic growth continues to be very strong. Corporate fundamentals continue to be strong. The only issue with the market was the high valuations. Clearly, the momentum is broken. The market breadth, as we have been seeing over the last couple of trading sessions, has turned really weak. And that shows that there is clearly nervousness across the market. Probably it's fair to say that we are unlikely to really pull back into newer highs immediately. But what's the time frame? It's really difficult to say.
Welcome back. You're with us on Closing Bell. Well, we have Ambarish Baliga with us on the show. Ambarish, great to have you on. Good afternoon. So let's talk about the pick that you have in mind. Which one is it today?
My pick is Tata Elxsi. It's a preferred ERD, which is Engineering Research and Design Company, to leading manufacturers, OEMs, and Tier 1 suppliers. And this space has been growing at about 13% CAGR. And by 2026, it should be a $72 billion opportunity. And Tata Elxsi, in fact, is growing at about 20% CAGR like over the last 3 years. It's in fact present in strong segments like automotive, telecommunication, media and entertainment, consumer electronics, and healthcare, which is mainly medical devices. And they're also playing a major role in the autonomous driverless vehicles technology. For Q3, it was a decent performance, although the sector overall didn't perform too well. Tata Elxsi grew at about 12% Y-on-Y, and the operating margins have been stable at about 30%. If you look at the deal pipeline, it's extremely strong. So I'm expecting a revenue CAGR even going ahead of about 20%, with a PAT CAGR of 25% in the next 3 years. So expected EPS is about 200 for FY26, and my expected price target is about 9,000.
What about something like a federal bank and the latest RBI diktat that they can't issue more co-branded credit cards? Now, I was just seeing some data. In 9 months of FY24, co-branded partnerships accounted for 77% of their credit card issuance. So it's been a fairly successful strategy. Though as a percentage of the overall loan book, it's not very high. Abhishek tells us it's at 1.4%. Do you expect a big impact on Federal Bank? We've already seen the stock lose 1.5–2% today.
Sentimental impact, yes, to a certain extent. As far as the bottom line is concerned, I don't think there'll be much of an impact. And we've already seen this stock underperforming in the past about a month and a half. So I don't see much of a fall from here. In case it comes below those levels of 140, I think it's a decent buy. Even at the current levels, it's a decent buy. In fact, I have a price target of about 170 to 175 over the next couple of months.
Okay. By the way, Ambarish, but there's some flashes at the bottom of the screen. Centre has formed a committee, and terms of reference for the committee include institutional reforms within the NPPA. We're talking about the pharma and the medical devices industry. The committee is for pricing framework for drugs and medical devices. So that is the news which is coming through. Now, more details in just a bit with our reporter.
How to balance price and availability of essential medicines while providing the incentives to the industry to sustain growth and exports. So balancing price and availability of essential medicines, how to design price moderation framework for medical devices. Again, while providing incentives to the industry, and also providing a price moderation framework for emerging and precision therapies.
Yeah.
To,
sounds like some controls, right? Look, I mean, we'll have to get details. Remember, on the devices side, things like stents, heart stents and sort of knee implants, the government in the past has come out with regulations and price caps, etc. So we'll have to see exactly what they're looking to do. But this is on both sides, medical devices and drugs as well, which is pharmaceuticals as well. That is the information that is coming through. This is all source-based information. Recently, of course, for the hospitals, there was that entire Supreme Court directive to the centre asking them to regulate standardized sort of procedure rates, etc. Hospital stocks had taken a bit of a knock, and I think there is a little more coming through right now. Amrish, you want to sort of weigh in on this one? We're just, of course, reading this out. This is news just coming in. All sources, source-based. Go on.
I think the government clearly is focusing on the sort of inflation which you have seen as far as hospitals and healthcare sector is concerned. In fact, if you look at the Indian inflation in that space, is about 14%. I think it's the highest in Asia. So I think it's decently clear that the government wants to clamp down on this to a certain extent. And surely it's going to affect that space. We've already seen the hospital space getting affected. Now, I think we'll see the devices space getting affected to a certain extent. And the two names which come to my mind is clearly Moripin and Nureka, which are into medical devices. So I think they would get affected to a certain extent.
Probably Medicare, right? That's the other one as well. We don't know, but we'll have to see. This is just, the committee set up to discuss the issue, and we know the broad terms of reference, but very, very early days. But take your point, Amrish. Surabhi?
No, absolutely. And this time, while devices, of course, they've been doing in the past, but even the terms of reference of this committee, they do mention procedures. Now, what sort of procedures and, how? Because I think as Timsy was telling us, some of this is state subject. So let's see how this plays out. But for what it's worth, the committee is going to take 3 months. So maybe the government will go and ask for additional time for this exercise to be completed at the apex court level as well. Amrish, before we sort of sign out, just want to get your thoughts in on PSU banks, because we got that news that the gold loan portfolio has to be monitored. So basically, there's a fair amount of regulatory scrutiny and sort of tightening the screws, so to speak, going on. How would you look at PSU banks? Would you still buy after the decline that we've seen?
No, I wouldn't buy at this point of time. In fact, I was, I think, one of the first few people who talked about buying PSU banks about 4 years back. But then at these levels, I'm finding them too expensive. They had become more of trading bets than investment bets. And the momentum was there. I think that's cracked right now. So whatever you see in the PSU banks now will be basically a bounce backs because of the sort of a correction which you've seen in the past few days. But then I think that should be utilized to book profits than to buy fresh.
Amrish, we leave the conversation here for now. Thank you very much for joining in. Counting down to the close of trade, and it's been a good session. The market, after yesterday's storm, has calmed down a bit. There is a rebound after 3 days of hectic selling pressure. The Nifty ending above 22,100, 22,140, a 140-point gain. Not at the day's high. We're off about 60 points from the day's high, which was 22,200, but still clocking in a pretty decent rebound of 140 points. Sensex up close to about 300 points. Mid-caps were shining. The small-cap index up more than 3%. The advanced decline ratio upbeat at nearly 5 stocks advancing for 1 in the red. Banks, though, particularly the large-cap private sector banks, took a bit of a backseat. They did see some buying over the last 3 days. But today, you are seeing corrections set in the likes of, an Axis Bank, an HDFC Bank, and IndusInd Bank. And the Nifty banking index was down 0.4%.
Okay, let's talk about the big recovery that we've seen on the mid-cap screen. 2% higher on the mid-cap index, and lots of gainers from the PSU space. They've come back with a bang, really. Look at SJVN as we're ending big volumes on the stock, 16% higher. IRFC is back to its winning ways, 13%. You've got Ircon, 12%. Hindustan Copper, Hoodco, Railtel, UCO Bank. The short point is that it's across the board. Railway stocks, yes, for sure, but even other names. A lot of the PSU banking names have done well, and some of the other stocks also on the upside, on the power side of the screen. And the large caps as well. We've been discussing Coal India's had a good session. ONGC's had a good session. So basically, plenty of movers and shakers from the PSU space on the upside. Non-PSU, perhaps a couple of stocks that we can point out. Actually, these are the smaller cap names. So if I talk about large stocks, then some of the Adani Group stocks have had a good bounce back. Adani Green would be one of them. Up and about. JSW Infra is up 10% today. IRB Infra is up about 9-10% as well. So even on the non-PSU side, private sector, mid-cap, small-cap names, good day, and perhaps a sigh of relief.
Absolutely. And maybe a few other names, right, before we wrap up. Yes Bank, by the way, was up about 12%. Some of the largest volumes. I'm talking about ex-PSUs, ex-railways. Electra was up about 14%. We, of course, discussed Hindustan Copper. Solar Industries, big move, about 13-14% today. You had Rico Auto, 20%. Started 10% higher, ends 20% in the green. Action Construction started 10% higher. The crane company, 19% on that one. XZCom, which is the recent listing, 20% on that one. Stock ended at about 212. There was Texmaco Rail, which was up 16-17%. And I can go on with a few others, but this is the large volume-led list. 5:1 as far as the advance to decline ratio is concerned. And the Nifty ending with about 150 odd points in the green. Not at the day's high, but not very far away either. It's a wrap on this edition of Closing Bell from all of us here. It's goodbye. Thanks very much for staying with us, but markets forward will pick up on all the action in just a bit. Stay with us.